Thank you so much for joining me on the show today, Andrew.
Great pleasure to be here. Thank you.
Yeah, so we're seeing the bears continue to tighten their grip on the markets. 8 straight days of losses for the markets. Your take?
Well, essentially, the market has largely been muted and heading southwards, like you rightly identified. Not thanks to the waning sentiment that has pervaded the market space. We've continued to see untowardly the lackluster performance across board, especially for the big names, which ordinarily we had hoped will try to keep the market uptick. But of course, market has been a lot under pressure. We've seen continued selling pressure coming from all quarters. I do think that this has made some prices decline below, their one-year lows, and for some, other investors who want to take advantage of such positioning, I do think that the market offers another opportunity for them to make such incursion. All said, a lot had to do with the political environment, which I think at the moment has been largely settled in terms of the direction that the political gladiators were playing out, particularly if you look at it from the dimension of Nigeria marking the Democracy Day yesterday, and for the reassurance by the president to be more specific, to the fact that a lot more is going to be done in the ensuing period of the administration. And I think that if they keep faith with the pronouncements we had yesterday, particularly with respect to poverty alleviation, enhancement of capacity, stability in terms of militancy effects, terrorism, kidnap, and all the ills that have loomed large in our environment, I think there will be a further presentation of hope, as he rightly pointed out. So some of that, I do hope, will trickle back into the investments.
All right, Andrew, I do hear you when you say that, because because we've always been talking about the right catalyst for the market to see, how the market is going to continue on that upward trajectory. We saw MTN coming just about a month ago, and we all thought that was going to be that's the very positive thing we're going to see in the market. But then that has kind of waned now. And then I'm looking at the next possible catalyst. Do you think that will come in the half-year numbers?
Yeah, of course. Half-year numbers will certainly be churning in as we progress into the month of July. Effectively, I think everything needs to be situated. Companies largely haven't done very badly in terms of their deliveries and performance. We've seen quite a number of these companies doing quite well. The numbers coming from the banking space, a few not quite satisfactory, but a lot beyond the waters have proved that there's still great hope and potential in the market space. And we're beginning to see that. So the Q2 numbers, to my mind, for a good number of the record companies will continue to assuage the expectations of investors. But a few, of course, are underwater. As such, are not likely to impact on the market heavily. So as a tonic, yes, half-year numbers will certainly be an exciting one to look forward to. But much more beyond the numbers, I do think that the political landscape is beginning to find a fresh and rekindled rhythm, which should also be some consideration going forward to attract investors, whether they are foreign or local.
All right, but when I look at the performance of the sectors so far, I'm looking at the full year-to-date performance of these sectors. I'm looking at some of the sectors that I think that should be driving the markets. They are really quite abysmal right now. I'm looking at the NSE oil and gas index is down about 17.5%. We're seeing the consumer goods index down about almost 17% as well. When you look at this coming in for these two major sectors in the markets, do you see any respite in the near future?
Yeah, that takes me to the earlier commentary you made about the addition of MTN to the basket. Yeah, of course, if you exclude MTN, assuming MTN never got listed, it simply means that the level of the market performance as of today would have been much lower. So there is not taking away the shine of MTS incursion into the space. It has actually added to the area of securities on the bourse, and it hasn't done badly in terms of its performance price-wise. The sectors, of course, that you made reference to also will continue to remain a stronghold on the bourse. A number of factors have affected the performance of some of the names. Taking Dangote Cement as an example, in the industrial space, yes, you know, the company is a large cap stock, and you know, the business of cement is got to do with progression in terms of housing, road construction, infrastructure generally. And for, you know, such a company to continue to enjoy the kind of mileage it ought to, it simply will be reflected by the individual capacity of households, individuals, and even the government in their ability to generate a lot more activity in respect of where their products will be needed for growth. So this tend to have impact on the overall valuation of the company at the end of the day. Consumption also will remain to some extent muted because of disposable income, you know, that is available to individuals or corporates, as the case may be. So the more people spend, or the ability to spend more, certainly is reflective on the revenue basis of quite a number of these companies. But like I said, there's a lot more to look forward to, you know, on the positive than the negative.
All right, then. Thank you so much for your time on the show, Andrew. I've been speaking to Andrew Tsaku. He's a trader at Kapital Care Trust.